What's up, guys? In this video, I'm just going to be going over order blocks. They are very simple. If you've ever traded other strategies such as supply and demand, or if you're even just aware of the concept, this is essentially the same exact thing. It's just kind of renamed and confirmed by a different thing to make it actually valid. So, without anything else being said, let's just get straight into it. So, first, start off with order blocks. So a bullish order block is the last set of bearish candles before a move up. So right here on the left, we have this last set of bearish candles before this move up. So this is a bullish order block. Now for the other side, we have a bearish order block. So this will be the last set of bullish candles before a move down. So right here on the right, we have a bearish order block because we have this last set of bullish candles before this move down. So the way that you confirm that an order block is actually valid and it is an actual order block is with the opening price of the last set of candles getting close past. So right here, if I were to get rid of that candle, right here, we have this opening price right here of this red candle that made this move down. So once this opening price gets closed above, that means that this is now an order block, because this opening price that sent price down and created this wick of resistance failed to hold. So now, once we close back above this opening price with a higher price, this is now a bullish order block. Same way on the bearish side, that right here, this is the opening price of the last move up. Once this opening price gets closed underneath with a lower price, that forms a bearish order block. So this is just another one of those confluences that we can use within our trades or to look for a trade, to form a trade idea. And like I said, very simple. It is confirmed to be valid by the opening price of the last set of candles getting closed past. So like I said, this is the opening price of the move up. Once it gets closed past with a lower price, we have a bearish order block. The opening price of this move down before this gets closed above, this makes this a bullish order block right here. So now that I've shown you these couple little visual examples with the drawings, I can show you actual examples on a chart. So price action has actually been very, very bad the past couple days, but I will go to this morning because there was a pretty good example. So right here, we can see we had this consolidation before we had a lot of displacement to the upside, and we had a lot of speed in these candles. Before we had this move to the upside, we had these two bearish candles right here that were formed before this move up. So right here, these two bearish candles is the last set of bearish candles before the opening price of this move got closed above. So this candle closing above right here validated these two candles right here to be a valid bullish order block. And we can clearly see once price returned back into it, it obviously printed to the upside and went to the upside. So same thing right here. We have this move down of these candles before this candle right here closed above this opening price of this move down. So this right here is an order block, because the opening price of the last set of bearish candles got closed above with a higher price. So this made a bullish order block. So I don't know if this ever got tapped. It kind of got invalidated and not used very much, but just for the point of, teaching it. Same way, if we just keep going up, we can see that right here, we have this bearish candle right here before this move up. Technically, you could classify this as an order block. A lot of the time, when I'm looking at my order blocks, I like to look at the one that really started the move. So right here, well, ultimately, the best one would be down here, where we first had this initial move up. And then after we, even with these candles right here, this set of bearish candles, before we had this run up right here with these, you could even classify this as an order block. This entire, I'll mark this up with a box, this entire area right here, you can classify as an order block, because this is the last bearish move before the opening price of the bearish move got closed above. And we can clearly see price retraces back into that order block and prints to the upside. Same with a bearish example. Show one of those. So right here, we had these candles up, or this candle up, before we had this big drop down right here. So right here, this would be classified as our bearish order block right here, because the opening price of this move up created this move down and got closed underneath. This opening price got closed underneath. You can see if I look a little closer, we close underneath it and then we retest it and start printing to the downside. We also revisit another time and we also print to the downside, and a third time. So clearly see that those ones were holding and were valid. Same way with right here. We have this move down before this huge expansion up with that displacement. So the last set of bearish candles before the move up would be all of these right here, these four. So once this opening price gets closed above, it's now a bullish order block right here. So we can, same thing as the last example, we closed above it, retested into it, and then printed to the upside. Same way that we also revisited it and also had another push to the upside. So order blocks are very simple. It's just like supply and demand. If you ever came from that, it's just what makes it valid is a little bit different. Being the opening prices of the move down, getting closed above with a higher price for a bullish order block, and vice versa for a bearish order block. So I hope that helped.